Hey, Bulls and Bears, more of my predictions are happening, and we're going to get more into the crystal ball a little bit later and even more predictions. But let's talk about the latest situation that I've been warning about that's actually ramping up here. And we've got a lot of news articles just out today about this. Bring it up in a bigger screen here. China's cyber institutions have hit ports and utilities, and this is the U.S. Fox News, U.S. alarmed as China hacks critical systems. Daily Mail, Chinese affiliated hacking groups infiltrated critical American infrastructure. So a lot of these happened over the past year, but many of these are newly discovered here recently. The Wire here, recent Chinese cyber attacks aim to cause societal chaos in the U.S. What do we talk about here in this channel? We said these attacks and outages, I think there's going to be a lot more, but these situations where our systems are compromised are going to ramp up. They're going to continue to get worse. And what have I been warning about here for a long time? I've always tried to say, not so much of a warning, but a word of caution to have at least 30 days essentials out of the system: food, water, cash, emergency essential items, because we're seeing these risks really escalate. Why? Because we have a lot more enemies across the world right now than we've ever had before. All these countries going outside of the US dollar, the BRICS alliance nation, which is growing all the time. We've got now the United Arab Emirates now trading outside of the dollar, and actually completely ditching the dollar. It's even worse than I said was going to happen. So, yes, a lot of enemies, and even countries that have been historically our ally are now showing signs of hostility, and this is just the latest. Of course, the whole dollar BRICS nations thing. China is one of the BRICS nations, so we have to position ourselves for this to get worse. And again, I'm not trying to scare anybody. I just think people should be prepared and get ready for something even bigger, because this economy, the way that it's coming down right now, I don't think that they want to blame their own policies. Do you? Do you think they're going to say, "Oh, we kept interest rates too low for too long, and we raised rates now with record levels of debt," which is basically the worst time to raise rates when you have record levels of debt, but that's what they're doing. But do you think they want to admit that they did everything completely wrong and backwards? Of course. So what will they do? Will they bring down the economy when we get hacked by, who knows, one of these countries? That would be the perfect excuse to bring down the economy. Look at 2020, and we had the health crisis. Of course, that brought down the economy temporarily. Then we saw record levels of liquidity being pumped into the economy. And of course, you know what happened after that: inflation. It seems like it's never, ever going to go away. Except there is one area that's seeing actually a price crash. And that's something else we talked about here: electric vehicles. Let me pull up an article on this here. And here's how they're breaking it down over at CNBC. Why experts say falling EV prices could actually hinder widespread adoption. And we'll talk more about that in a minute here. But it outlines in this article, prices of used electrical vehicles are down roughly 30% year over year. Can you imagine buying something and a year later you've lost nearly 1/3 of the value? So basically, you bought something for $50,000 and now it's worth about, what, $34,000. This is a big drop. And it's another thing that we said here was going to happen. A lot of people are not liking the fact that they're going to be stuck when the power goes out. And that goes, again, to the beginning of this video, where we're seeing increased attacks and system failures and lots of other things that could really lead people or leave people in the dark. And what are you going to do when you can't just gas up your vehicle and go, when you have to have a charge on your vehicle? All right. Also, a lot of people don't like the fact that they take a long time to charge. A lot of other problems we can get into, but bottom line is, we said exactly what was going to happen here, that EV prices were way too high. And of course, there was a lot of fear that gas prices were going to keep going up and up and up. And a lot of people ran out and bought an electric vehicle thinking they were going to save a lot of money at the pump. Prices have come down a bit, but even before gas prices came down, we started seeing EV prices fall a year ago, because these are down 30% year over year now. Quote, the mainstream appeal of these cars is still not there, said Carl Bauer, Executive analyst for IC Cars, a search engine for used cars, quote, they're still too expensive and they've got too many limitations in terms of how you use them, unquote. It's amazing that people in California is actually the leading state for electric vehicles, not just because we have a lot of infrastructure for it, but we have a lot of the people out here that want to go green, things like that. But people are afraid because at the same time as they're encouraging people to buy electric vehicles, they're saying, oh, don't use so much electricity because the California power grid is in big trouble and it's too stressed and it may fail. So why would you want an electric vehicle when they're warning people not to use so much electricity? It's completely insane, completely backwards. And speaking of California, take a look at this. California faces $68 billion deficit amid steep revenue decline. This is the worst budget deficit since the early 1990s, folks. We're going back almost 30 years. And this is obvious when you have a lot of big money leaving the state. States that tax too much are going to lose their biggest tax base. These companies and businesses are going to leave the state, and they are leaving the state, and many of them have already left the state for greener pastures. States like Texas, Florida, Tennessee, with much lower cost of living, one, but much lower taxes, two. So now what are they going to do? Are they going to raise the taxes on the people that are still here to make up for the deficit? Well, if that happens, more people are going to leave. So then what are they going to do? So it's interesting how states deal with these types of things. They think raising the taxes is the solution, but yet businesses just end up leaving. That's something about when you have 50 different states to choose from. It's funny how that happens, right? It's funny how that they don't see that coming. They don't see that on the horizon. It's almost like they need this crystal ball right here so they can figure out what's going on here. It's funny how, this channel and, my analysis here, one man show, can see these things coming from far, far away. And that's what I try to do. I try to dig through the news, try to research, try to stay on top of things. And it's just logic and common sense. We add two and two together. We connect the dots. We read between the lines and, tell you what's going to happen far in advance. Also, back to the electric vehicles for a minute. Ford, they just had a test for EV adoption, basically to see what the demand is going to be going down the road here. And that test failed. The car maker has now decided to slash production for the electric F-150 in half. So they're cutting production in half because of the huge drop off in demand for electric vehicles. Now, with the high cost of living, higher interest rates, massive levels of debt, record levels of debt for the average household, we're bound to see a pullback in certain types of spending. That would be discretionary spending, things like toys. Hasbro laying off 20% of its workforce because of plunging toy sales. And this is right in the middle of holiday shopping season. With today's the 12th, so Christmas is just a couple weeks away, and we've got Hasbro laying off 20% of their workforce, folks. That's huge. Now, part of it is I think a lot of kids don't want to play with toys like they used to. Even very young kids want to get on a tablet. They want to look at YouTube, let's be honest. They want to play electronics and devices versus toys. I think that's part of it. But, I mean, there is still a lot of young kids that play with toys. Why are we seeing such a huge drop-off this year? And, tablets and things like that, devices for getting on the internet were around last year, the year before. Why this year are we seeing this big 20% slash in Hasbro's workforce? Also, I've got a chart up here. If you slash away inflation, or if you do not count inflation, consumer spending is basically back down to 2019 levels. Spending per household on holiday items based on BAC aggregate credit card data, and this shows you the dark green line, 2023. We're actually below 2021, and we recently dipped, looks like, below 2022. And this, of course, is a huge spike up here just before Christmas, and then we see the drop off early in the year as people pull back on spending to try to get their budgets realigned after spending too much on the holidays. And of course, a lot of people returning things back to the store. So this is just going to get worse And we just have to prepare for this. That's why we want to keep you on top of all the latest news here. And if we're prepared well enough, we can actually benefit from what we see coming at us down the road here. And I've always been of the opinion that the more you know, the better. And I've been doing really good in trading lately. I've got some investments that went up 30%. We're talking about that gold stock that I mentioned here a few weeks ago. Other investments up 50% plus that I'm taking some gains on. Not big gains, or not. I'm not selling off a lot of them yet, but when something goes up 50%, I do sell off a fraction of it, usually like 20%, and still hold the other 80% for more upside. If it goes up more, then I sell off a little more, and so forth. Then if it crashes, then you have money to buy some more. And what I've been doing is I've been using your support here for this type of trading that I do. And I just want to give a quick shout out before we end this video to a few of my supporters here on this channel. Thank you to the following viewers / supporters. Rodney B. Shields 957. Thank you for the super thanks. Appreciate you hitting that button down there. Morpheus 3565. Thank you for the huge super thanks. That's amazing. Thank you so much. Really appreciate it. Folks, this money is going back into the channel, into investing. That way I can share my investments with you. And a lot of us, are going to be able to make money off of this. Christopher Quinn goes way back with this channel. Thank you, Christopher, for another shot of support. T.S. Braden, thank you for your support. I've seen you, T.S., here before. Thank you very, very much. DJ Jojo, the legend, the DJ there up in Michigan. Thank you very much. Maria Rivero, huge supporter of the channel. I've seen you so many times giving me a shot of support. Maria, thank you very much. Evergreenification. Sorry, it took me a minute to read that. Thank you for the shout out, for the shot of support, rather. Thank you to everybody, and even those that didn't give me support with the super thanks. Thank you for being here. Thank you for liking the videos. Thank you for subscribing. Thank you for sharing the videos. Appreciate it. Keeping this channel alive. It's you, the supporters, the viewers, that keep this channel operational. Now let's get into this crystal ball prediction. I want you to look deep into the crystal ball and think about what's going on in the galaxy. What do we see? Well, we've got big problems, but guess what? We're going to be just fine because we're ready for it. We've got the central bank that wants to cut interest rates because they see what's happening. They see that consumers are on the financial edge, and a lot of consumers don't have much longer. People are borrowing from their 401ks. They're taking emergency loans from their 401ks. They're running up debt like we've never seen before. Delinquencies are starting to increase. But here's the thing, they're not able to cut rates because we already have the threat against the dollar with all these countries turning their back on the dollar. So they're between a huge rock and a very, very hard place. And it's not going to end well. I can't tell you exactly how it's going to end, but I can tell you how to prepare for it. What you want to do is have cash ready for deflation, have some investments, especially silver, in case of massive inflation and money printing out of control if that were to happen. Would that really surprise anybody if that were to happen, right? So be ready either way, either direction. We're going to be well-rounded in our financial preparation, everybody. Thanks for being here. As always, keep stacking. Big love to everybody. Bye for now. Peace.